Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Hello, this is Aaron Edwards. It is May 27th, 2025, Tuesday after Memorial Day. We've got a lot to cover here. It actually might be a quick video this week as the headlines are kind of straight to the point. Before we jump into that, we always want to start with that bias for action, that recommendation. So let's get started with that. Let me share the screen and we will check that box. I should tally it up. I think this is week number 5, maybe week number 6. No action recommended. And the truth of the matter is, if we look at what's been going on in the field, really during that no action recommended, we've had week after week of planting, and we have had pretty steady rainfall. So let's take a quick glance at just at some images. We'll start with the weather. Yesterday was Memorial Day, so the crop update we don't have an update on crops, but based on weather and reports from farmers, it seems to me like we're pretty close to the home stretch there, wrapping up planting. It's looking like almost all, if not all of the Corn Belt will basically get crops in on time, unless something really bizarre happens. And so I wanted to start with this image here of weather. Let me get a marker up here. Let's see what I think. Red might stand out nicely. Check red. There we go. So this is World Ag Weather. Really good resources there on their website. You can look at a lot of those for free. This is the 1 to 7 day. This is like forecasted rain. So if you look spot by spot, it's not like we're just going to get this rain over the entire Corn Belt, but it's one shower here, another shower there, a little bit more rain here, a little less there. When you add it all up together over the week, you really get this, most of the Corn Belt really getting just really pretty good rainfall, right? And maybe I was a little off on my drawing there of the Corn Belt, but a lot of corn and soybean country is getting expected rainfalls. And a lot of what we're going to say, we could drill in, and if you want to go to their website, World Ag Weather, you can drill in and you can punch around, how was past rainfall. But it has rained, not a tremendous amount. Some places have gotten a lot of concentrated rain. We're seeing some images of flooding. It has rained. It's that we've had enough good weather days to get crop in, for the most part, ahead of pace, or at least close to on pace in most areas, and there is rain forecasted. So it's really hard to get a market excited about a rally in that situation. We'll go over the pyramid. We build a market plan. If you're watching this in real time, we should have worked that out. Then some of the big picture items that we look at are seasonals, funds, and technicals. The way I like to think about it is seasonals help me make an annual plan and narrow it down to monthly actions. Funds help me make a monthly plan and narrow it down to weekly actions. They're updated week by week. Should I tweak it? And then technicals is kind of like that real fine tuning. That's like, okay, in this move, this is a little higher, this is a little lower, we're in an uptrend. So they all play together very nicely. We've built the plan, done the analysis, we update it week by week. Action, and again, it's been a long stretch. It's rare to go this long without a call to action, but I do want to go look at first the bean market and the corn market. I think we'll do beans first here. And another thing I just wanted to point out, we're going to start off with the beans. Another thing that I just wanted to point out is we're actually going to focus on the new crop because that is the crop under risk. I'll talk a little bit more about basis at the end when we go over that, but the basis, big picture, and old crop, big picture, this is what's happening. In the Eastern Corn Belt, we have real big picture, right? I know basis is location specific and it matters where you are, but generally speaking, in the Eastern Corn Belt, we're having better than average basis levels for corn and beans. And in the Western Corn Belt, we're having worse than average basis for corn and beans. So the wash of it is what's really going to happen to basis and what's going to happen to old crop. We really need to get something friendly. Now, if we get a threat to the new crop, that might make buyers say, let me make sure I get my hands on some of this old crop because I don't want to be, I want to make sure I have enough grain. So we can still get an old crop rally, but we're going to focus today on the new crop. Let me pull up a marker. We'll do this. Blue would look nice. So the bad news, if we look over the I'm not sure how, let me get rid of that. Let's try this again. Red, blue, there we go. Okay. If we look basically over the last several weeks where I said no action recommended, we'll probably start right around in here. And you see, well, the beans got a little bit, they were a little sold, then they got kind of bought, but then they stopped buying. And again, last week, we ran out of steam. So the spec funds are still long beans, but they did reduce that a little bit. They're stepping out of that bean position just a little bit. What gives? What's the direction of the market? Old crop beans are a little stronger than new crop beans, but this for me is the real, this is new crop November contract soybeans. And I just wanted to point this out. First thing I wanted to point out, let me see if I can get this up here at the top. There we go. First thing I wanted to point out was at this price level, actually I'm going to switch that to black. There we go. At this price level, this has been a price level where we've spent some time, right? And if we go back, we've spent some time at this price level. If you look over the last 6 months and you were to draw a range, let's box it in, right? If you'd say over the last 6 months, let's draw a range from kind of the highest this market's traded to the lowest. That last line was a little off. Let's just, picture this box and maybe split it into quarters. Over the last 6 months, we are kind of here, right up here in this top quadrant, right? If that got a little bit messy maybe, but let me back this out a little bit. See if I can make this cleaner. Black across, that was blue, black across the top. There we go. And then let's see if we can roughly split this into quadrants. You're gonna have to use a little bit of your imagination. But if we were to picture that in fourths, over the last 6 months, we're kind of close to the top fourth of price action that we've had really since we got that little bump in October. So maybe this is a market that should be sold. Maybe, right? Maybe this is the the upper end of that. And we've only really been in the lower quadrant of, this diagram, kind of this box from the last 6 months. We've only been in the lower quadrant really 2 moves. So how comfortable can we be? And if you know probably what I'm going to say, the other thing that we got is we are finally above the 200-day moving average. This is the first time since 2023 that with any level of comfort we've been above the 200-day moving average. That's this big one. This one here is the 200-day. And then this little one here that we're seeing, that's the 20-day moving average. So not only are we above the 200-day, we are still above the 20-day. If this holds, let me get out some of this noise here. If this holds and we can stay above the 20-day, I do still think we have a shot at a rally. As long as we have weather charts that are looking somewhat like they are there, where there's plenty of weather forecasted and planting's going well, yeah, that's not giving us much of an excuse for a rally. So we do need a weather story. But soybeans, I don't feel like it's time to just say, oh, all hope is lost. Beans are done. I was very tempted. I almost recommended soybean sales this week because of saying, hey, we're at some of the better prices that we've been over the last 6 weeks. So I came very close to making some soybean recommendations and saying, hey, let's get a start on an average at 1050, or let's just get started. But here's my thought, and this is, markets can get away from us, and that's scary. But I want you to think about this, okay? Option number 1, we stay in an uptrend, which for the most part we have. It'll be good to at least wait a week before we start making that sales. Maybe we get 20, 30 cents more out of this. Option number two is this market falls. All right. We have had a lot of opportunities in this price range. So what are the chances that we don't get at least another shot at 1050? So it's more stressful to say, I should have sold 1050, it came down. But I think there's a decent shot that on new crop beans, this won't be the last opportunity of this growing season at 1050. I think that there's a decent probability we'll see 1050 as an option for prices. Hey, you can put that in your pocket, if not now, sometime down the road. So we might as well wait a week, see if we get that rally. And if we don't, then maybe we should start looking at this 1050 and maybe we should say, hey, let's just make sure we're putting some of this in our pocket. And that might be a little bit stressful to say, why didn't we sell it sooner? But in my opinion, right, the way I like to handle markets is if there's that upside potential and I can wait a week and it's reasonable, then let's keep it. With that being said, let me shut down the beans and let's switch over to corn. Corn is a little more alarming. Let's get a marker. I'm going to go with, it's a little alarming. We'll go with red here. There we go. Red there. So the last 2 weeks, we've actually seen the speculators get net short on corn. They're selling corn. That is a little bit alarming. And if we look from those February highs, they were at this position. They have really come out of a lot of contracts of corn. What is that? Over 300,000 contracts of corn, less. They've really come out of a lot of positions. The big question on corn, and we'll pull up new crop corn to have this conversation, is the corn market done? Have we had, all the rallies we were going to get this year? These were the only 2 rallies that we got a shot at, and they're done, and corn market's done. It's not going to come back. The same conversation, switching this to blue, this is the 200-day moving average. This is the 20-day moving average. We peaked above it, got rain forecasted, and overnight trades right below it. Can corn rebound or not? And that's a big question. Now, I want to point out two things. One is going to be kind of the optimistic look, and then the other one is going to be the more pessimistic look. I don't know if that'll straighten it. There we go. Well, I don't really want that arc, but we'll take it. Let me see if I can get a little straighter line. There we go. All right. It's not perfect, but if you look at that line from the lows in December, move that up to the top. From the lows into December, the May lows have not taken out those December lows. That's upward sloping. The other way to think about it is from this high up here. Let me do this the other way. If you go here, there. So we also haven't taken out the highs. So what gives? Is this market a downward trending market that is just, we're gonna just keep having pressure down here? Or is this an upward trending market? And I think that there's a decent shot that, it looks like we're kind of in this triangle wedge, and are we going to get a rally or are we not going to get a rally? This last move down here in corn, this did not make very much sense to me. Where is it? This last move in corn didn't make a tremendous amount of sense to me, and it kind of did. We had rain and we had good planting and a lot of acreage, but that's quite a bit of conviction. Spec funds have started selling. Really, we need something friendly for the corn market, and we need it pretty quick, or else we very likely might just get the spec funds just kind of dogpiling this market and pushing it down. The first alarming thing is if we take out these lows, that'll be very alarming. The next alarming thing would be if we take out the December lows. I do think there is a decent shot that new crop corn rolls around and we are at or below these December lows. I don't think that's beyond the realm of possibility. This corn market seems very heavy. Can we get the flip side of that? It would be very unusual, not impossible, but it would be very unusual for a February rally to be the highest rally of the year. Typically, we would at least go back maybe once or twice more and at least challenge that. So that would be 480 from the top. If it sounds like there's kind of not a ton of definition one way or the other, this corn market is confusing. It's not giving real clear signals, in my opinion. This is where we really lean on indicators. So we'll go to the end. Actually, we should do that right now. This is where the indicators really keep us disciplined. And so I kind of want to walk through that with you. So let's go look at the indicators. Seasonally, it is a sell for corn. Seasonally, it is a sell for beans. Managed money for corn, they are short, but not enough to sell. The trend is down. Okay. And for beans, managed money is long, but not long enough to sell, so it's neutral, and the trend is up. These indicators really aren't giving us a strong signal. Hey, should I buy corn? Well, the trend is down, so maybe yes. Funds are neutral, so I would be careful. And corn is in a sell, so yeah, let's probably not buy. Should I sell corn? Well, seasonally it's a sell, but it's in a downtrend. It's really not been in much of an uptrend, too much. And managed money is actually net short. So it's just a mixed bag. And a lot of times from experience, although it's tough to say, hey, the best thing is to not take action. sometimes it's just better to wait for clear action and then be ready to execute. The main thing that concerns me is this seasonal sell. The calendar clips away. So every week that goes by with no action recommended, we are putting more weight on, more pressure on that need for a rally. And that's both, our recommendations here at Santo Springs, but that's also just the market in general. So as more time goes by without a rally, to some extent, we're kind of accumulating selling pressure over that next rally, and that does somewhat cap our potential. So we want to be careful to not overplay our hand on the patience side of it. But I've seen an awful lot of years where, hey, May looks really bleak, and then all of a sudden June comes around and you had some of the better opportunities of the year. Off the top of my head, I can think of a number of years, but 2019 was like that. 2023, the actual highs I think actually came in July, but it rallied all through June and got real good the last 3 weeks. So yeah, we probably need some dry weather. We probably need some times where you're a little uncomfortable in the field. But I'm not ready to say we've got to run for the hills, panic sell because we're running out of calendar. But we're getting real close to that, right? We're getting real close, not to panic selling, but to just being disciplined about making seasonal sales. Basis. Let me get the mic up here. Corn and soybean basis levels, generally speaking, are above historic averages in the Eastern Corn Belt. And below historic averages in the Western Corn Belt. Old and new crop soybeans have had a golden cross and sustained trade above not only the 200-day average, but also the 20-day moving average. The old and new crop corn markets have not been able to sustain an uptrend, and overnight trade saw them fall below the 200-day moving average. Technically speaking, beans are very strong, corn is very weak. No action recommended this week. Next week's June. Hopefully June brings good news. At least for markets, right? I hate it when good news for markets is bad news in the field, but I guess we can hope that it's just your neighbors that get affected negatively. I'm kidding about that, but hopefully we can get at least a weather scare. Maybe it doesn't damage your crops, but it gives the market a little rally, a little uncertainty, give us something that we can take home, make some good sales. Next week's June, and a lot of times we get rallies in June. Let's hope this year we do. Have a great rest of your week.